The major networks are back with their same old crap. This time is different. What's up, everybody? Welcome aboard. It is Bubba's Bottom Line for Sunday, September the 1st, and welcome to September as we start the new month and finish the last month of quarter number 3 as the year flies by. And of course, the networks are at it again, and so are many of the advisors with the common chant of this time is different. Does anybody out there really believe that this time is different than any other time? Yes, they'll make all their cases and it'll even sound like it makes sense. But what do we know for sure? Okay, we know that the markets will have a sell-off. We know they will have a meltdown. And we know that 5 years, 10 years, whatever period of time from now, they'll be an average of 8 to 8.5% higher than they are. But in the meantime, there will be many bumps in the road. But let the media convince you that, of course, this time is different and that it's not the same and that magically somewhere along the road, the trading world, the investing world has changed. And now all you have to do is put your money in and pull the handle down. It's just like a slot machine as the money comes flowing out because of all the millionaires being made through their 401ks, through all the stuff that's going on, all the free money that we continue to create, which really is not like it's real money because everywhere you go, it takes a lot more money to get through there. I mean, interestingly enough, I had dinner at Steak and Shake last night with my son and myself. And of course, I'd never been there before. I'd heard about it, obviously a public company. And when I paid the bill, you know, it's a fancier fast food restaurant if you've never been there. And for 2 hamburgers, 2 fries, 2 Cokes, and a little dessert, it was like a $33 bill. Okay, I mean, again, you know, so the same meal that I would get at McDonald's, you know, for $6 or $10 is now $33 at Steak and Shake. And I'm not saying that Steak and Shake, Shake Shack. I'm not saying that Shake Shack wasn't better. I'm not saying that the quality, all I'm saying is that because of the setup we have now, because of our system, because of the Federal Reserve and their continued pounding on the dollar and trying to devalue it, which they've been very unsuccessful at, we continue to see higher prices. So yes, you're making more money, but you're paying so much more money. And of course, we continue to hear there is no inflation, but yet prices that you pay, that you use, of things you do every single day continue to go up, but there is no inflation. Because, of course, those are too volatile. And we've got the big tariff wars going on and the trade wars. And, oh, my God, the retailers are having conniption fits and saying, oh, your prices are going to go higher if this continues. And we're going to see this, that, and the other thing. Let's just look at it straight up, okay? Let's look at the real facts. Let's not look at the usual typical bull that you get from either the CEOs or from the media, which is, oh, these tariffs are brutal and they're costing us so much more money. From a retail perspective, okay, when you are now buying goods out of China, okay, you are not paying any more money than you were paying before, tariffs or no tariffs. So again, enough with the BS, the garbage, the crap that we continue to listen to because we've seen this. And if you remember the famous words a few weeks ago, that China is a currency manipulator, and they are. As is every major economy in the world, they all manipulate their currency for the same purpose, to create more exports. So it's always a race to the bottom, and the race to the bottom continues to take away your cash because the $100 bill in your pocket today, if you have one, okay, is probably worth about 20. All right. So pretty soon they'll eliminate all coinage and will be with dollars, and then they'll eliminate singles because again everything will be so expensive. Okay, but in the meantime, so let's get back to reality and facts. And facts are simple. Okay, the dollar, the prices that retailers are going to pay is not going to change. Okay, because the yuan has been devalued by more than the tariffs that are being added. And of course, today, more tariffs out there. And again, we'll see what reaction the markets have. And of course, the markets are closed through the pit hours until Tuesday, but they are open electronically tonight, and they will trade tomorrow electronically until noon. And we'll see how they open tonight. Would be no surprise if they got whacked a little bit tonight. But again, we're not predicting a market collapse, a market meltdown. I am telling you that it's a matter of fact that at some point in time, the markets will have a major sell-off. Whether or not it's today or tomorrow or next month or next year, that I will never be able to tell you. I will tell you that we remain short the S&P, we remain short the Russell. However, we have stayed long the NASDAQ, and we are long now. We reversed the Dow on Friday. So in the meantime, we're kind of split back and forth. I would say we're more neutral. However, we are set up for a bigger sell-off based on the shorts versus the longs that we have. The Russell and the S&P, which we are short, if we are going down, will probably go down faster than the NASDAQ and the S&P and the Dow. But we'll see. Again, we'll see how it plays out. But in the meantime, when we go back to the price increases, these are only excuses that are being made, A, to account for potential earnings misses later, okay, and B, so that they can actually raise prices for you probably right into the Christmas season. You know, one thing we know about Christmas, no matter what the economy is doing, people don't want to disappoint friends, family members, especially their children, and they're going to step out and buy almost regardless of what else is going on. So again, maybe the under when economies are in bad shape, maybe the buying slows, but certainly it does not go away because again, people want to make sure that they're taking care of their families and everybody else. So this is a crock. It's BS. It's more of this Blizz media garbage. And of course, this does give them, as we've given the stories many times, commodities rise, Starbucks raises their prices, they never come down. And this is why you see continued record profits when we get these profit reports. But what they're really doing for you now is they're preparing you for a bad earnings quarter because, as I've said, okay, for months, we are in the very early stages of a recession. I don't care what the economists say because they don't know crap anyways. They're highly educated, but have no common sense and have no feeling of what's really happening on the street with the average trader, the average investor, the average person that's out there. Okay, so let's not kid ourselves that this is any more than a way to manipulate the minds of investors and those of the people that are buying that, oh, yeah, we're having tariffs, so there's going to be higher prices. In the meantime, okay, China just showed again that they are collapsing and their economy is going to the toilet. Now, again, what does that mean in the big picture? Well, we've seen many of the markets around the globe collapsing because, again, there's a lot more weakness. And of course, as you've heard the term, we are the cleanest shirt in the dirty laundry. I mean, we are still the best economy, which was always the case. We are still the reserve currency. So again, there's a lot of reasons to believe that money will continue to flow into our markets. But at some point, they turn the faucet off and the money stops to flow, and that will create some selling. But again, we're not in the business of predicting what the markets will do in the very short term, other than through our algorithms in which we trade from. But we will say this with 100% certainty that there will be another market meltdown at some point. When is the only question. But again, the factory orders in China are collapsing. There's many issues. There was issues in China when they were reporting great numbers. Okay, we've talked about here on all of my programs for years about the hidden cities and other things in China. This is just magnifying the issues. And of course, China, believe it or not, has issued more new debt and more new money than anybody. Okay, so again, we worry about what goes on here, and certainly we should do that. But China has printed more money than anybody else by a significant amount. I believe the numbers are China has created $21 trillion of crap paper versus the 15 trillion that we have created. Okay, now if you take those numbers and you put them A into the size of the economies back to back, and B into what does the future look like, and it becomes even a more dramatic figure. But again, we've got the new wave of the new wave of tariffs kicking in. Okay, and again, I'm happy that President Trump will continue to squeeze China, because again, I believe that he is correct in his way of going about it. I believe that this is about time that a president stood up and said, no more. Because again, we have been the whipping boy or whipping girl, whatever. I want to be politically correct. Okay? We have been the whipping person or the whipping place that everybody comes to for the free money, and we doled it out like it was nothing. And it's about time somebody stood up and said, enough. Okay, we're not going to continue to give away capital. We're not going to continue to give you something for nothing. You want to get it, earn it. Okay, and what is wrong with that? I mean, do we not have enough of our own problems here that we should be using that money for? Okay, go anywhere. I was just in New York and Baltimore and saw more homeless than I've ever seen in my entire life. So let's talk about how great the economy is and how great the politicians are doing in their own districts. And Elijah Cummings, who we had the big battle with, I was in his city. I thought I was in a cesspool. Okay, I thought I was in a toilet when I walked around. Okay, and listen, Chicago's no better. So again, I'm not there. Wherever you go. Okay, and as I walked through Penn Station, okay, to get off a train I took from Baltimore to New York, I had to wade through hundreds and hundreds of homeless people around Penn Station. Okay, so isn't it time we tried to take care of that part of the problem right here in our own country? Okay, instead of continuing to give away the money elsewhere. Okay, now I'm not saying that this is going to get done right now, but I certainly think that it is something of importance that needs to be taken care of. I think we need to take care of America. Okay, again, that would be what I would be concerned about first is to take care of it here now and quit doling out to all the other countries around the world who want our cash. Okay, but going back to the tariffs, I believe that this is the correct way to go about it. I believe that we should go after China, and I believe we should rein them in. And I think between the intellectual properties and all the other issues that go on there, I think it's about time that we had a president stand up and say, enough. We're no longer going to do it. This is Bubba's Bottom Line, Todd Bubba Horowitz, and we're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. And of course, always great to be with you. What's up, everybody? This is Bubba's Bottom Line. And of course, we're taking a little break here, and just want to remind you, we just did a great webinar last week on equity portfolios and hedging. And of course, Tuesday night, we will be doing one last webinar, because on September 10th, Tuesday, September 10th, will be our last hedging class of 2019. Okay, and again, I don't create fear or panic telling you to hedge. I'm just saying you should always be hedged. Then you don't have to think about it. Okay, that's the way that I look at it. And of course, we've got two new sponsors coming soon, one being Ticker Talker and one being the Dolan's Group accounting firm, my personal accountant. But in the meantime, also want to remind you, if you'd like to help out our high school program, just go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with your host. Oh, that's me, Todd Bubba Horowitz. Welcome back to Bubba's Bottom Line. It is Todd Bubba Horowitz, and of course, this is Sunday. September the 1st, a new month, new tariffs, new stuff, new action, and just can't wait to see how the markets open tonight. And of course, it should be interesting, especially because our markets are actually closed until Tuesday. I guess the official opening would be tomorrow night, but they will open tonight, and they'll be open through the Europe sessions and so on and so forth. So we're open until noon tomorrow. In the meantime, markets this week were fairly wild. We had some major ups, major downs. We just concluded a month of down for the month, fairly volatile, fairly active. But again, remember, volumes were extremely light. But we never make an excuse for volume, because at the end of the day, what dictates what the market's going to do? I'll give you a second to think about it. One, price. It's always about price. Okay. Yes, volume sometimes can help, but certainly the biggest key is always price. Price determines what next move is going to be, because price is absolute. Price is what you can collect on. In the meantime, markets look a little bit weak now. However, our Dow signal did change. So we have a Dow long, and we have a NASDAQ long, and we have a S&P short, and we have a Russell short, because we do trade in our portfolios, all four of the indices. So we continue to see that. And again, where do we go from here? Well, I think we're at a very interesting break point in the markets, and that is we're right at the top end of resistance. Now, if you've heard me talk about the phases of the market before, congestion being the most miserable phase, which has proven out with a lot of the trading we do, it's just a miserable, tough phase to trade, because after all, it is the greatest time of uncertainty. But of course, the markets will break out one way or the other. And again, from here, I give you no prediction. I think the probabilities are we go lower first. Okay, my prediction from here, or my assumption, based only, and this is only based on the current footprint that I can see in the market, is we head back down to support. And it looks to me that we stay in this consolidation range for a little bit longer, and we will eventually break out either to the upside, which is, again, we don't say which way for sure, or to the downside. I would think it would be more likely, based on my feelings of the economy and other things that are going on and where we stand. They should break to the downside, but certainly I wouldn't fall out this chair if they did break to the upside. So we will continue to watch. We will continue to trade the algorithms, so that I don't have to use my opinion. Okay, I do understand where we are, and we'll continue to watch that. Gold continues on its ascent at 1,600. Had a huge blow-off top last week and came back and settled perfectly. And again, remember, blow-offs action, which is when markets go straight up or straight down on heavy volume, always resolve themselves in a couple of different ways. And when they resolve themselves in consolidation, which is what gold looks to be doing, that is very, very bullish in this case. Obviously, if we were having a sell-off and the bluff was to the downside and it was consolidating at the bottom, that would be very, very bearish. But based on what we're seeing, I mean, we've been long gold since 1,300, a little bit under. We continue to think gold is going to go higher. Our next target, 1,600. Now we've got higher targets from there. But as you know from watching me, and when you hear me talk on air, I only can look one level at a time. I am not interested in making some ridiculous, moronic forecast that gold is going to be 5,000 or whatever it is. There's a lot of room to get there, and certainly someday maybe it will be. But I can't see that. I could never justify that. The highest I could ever justify right now is 1,900, which is the all-time high. But from where we are right now, first we have to see, we can't get to 19 unless we get through 60. And that's where I'd be looking. In the meanwhile, oil, okay, continues to churn. And of course, we're long oil. I hate it. I still hate it. And again, it did have a little bit of a meltdown on Friday. And again, I don't take a lot away from Friday's action. It was really light. But again, price determines. And it was interesting, if you looked at Friday's action, how first oil broke at one point early in the morning, and it went, it kind of chopped and then went straight down. And then the euro currency kind of chopped and went straight down, which should tell you something. We'll talk about that in a minute. And then, of course, the equities did the same thing. Bonds continued to go higher. But oil, again, you can listen to the jackasses make a bull case. And again, I'm not saying it can't go higher. I'm long. I don't like it, but I'm long. Okay. But again, I see my personal opinion, okay, I lose money on the long trade, I get short, and it goes into the 40s. That's how I see it. I don't see why it means that everything is so great. I listen to, the pundits. I don't listen to them. I mean, they're on because just kind of noise, except when there's baseball games on. And I hear them talk about, well, there's such a great demand for oil. How can we not have such a bullish market? And I go, well, A, there's not such a great demand for oil. Number one, okay, these numbers are never that accurate. They go wild. They're always wildly miscalculated. In the meantime, we have a forever supply of oil in this country. Okay. And you would think at some point there may be some transfer over. And we've already seen some talk about, they're trying to, work on the natural gas. And that has been always, well, natural gas is so clean. And now they're coming out that natural gas has some methane, which, listen, there's a lot of methane around. In fact, some people's water that they drink has a lot of methane in it. Okay. In fact, some of the water you drink is sometimes flammable. In the meantime, oil, again, we take no stock out of the big drawdown. And that doesn't mean that we're all of a sudden having a bull market, nor does it mean there's a greater demand. I mean, again, typically it's a supply demand issue anyways. And of course, the bond market does continue to charge higher. Interest rates continue to go lower as we see the yield curve invert. And we're going to talk about that in our commentary. But as we see the yield curve inverting, and of course, interesting enough, if you go from the very beginning and you start out with money markets, 1 week money markets are paying almost 2%. Okay, so and 30-year bonds are paying under 2%. So should I give my money for 1 week, or should I lock in for 30 years at 2%, at under 2%? Again, the chase for bonds, the chase for yields of any kind is a big problem. Okay, and again, this is just another warning sign. Okay, again, when you see these markets and things go bonkers, these are just warning signs that are telling you that there's underlying problems. Now, again, we're not predicting when it's going to happen. It's just a matter of simple fact that in the 150 years history of the stock market, and in the the world history of any kind of market, from tulip mania to the South Sea bubble to the cotton panic, all the way down the road, and panics we never heard of. Okay, it's always the same. Eventually, greed takes over, and when the greed is finally done, then the fear and the panic will show up. And again, when it will be, nobody knows. Grain markets, we're short grain. So again, that's a good sign. But again, from my own personal view, when I look at them, I go, boy, I certainly like to own grains at these levels. And I'm telling all my farmers and producers, if you can afford to store your grains, I would not be selling at these prices. Now, again, you have to weigh. If you have to pay storage costs, I would not store. I would sell and buy the board, okay? Because it's the same thing. But if you have the room and you have the bin space on your own farm to store without cost, I would store. I'm not a seller here, other than from my algorithm that we're still short. I do not believe even if I couldn't sell more here, just because. Again, I look at this as a different kind of play now, one I'd be willing to hold on to, but we will stay short until the algorithm turns. And I do believe that the numbers are getting closer to turning on some rallies, but we will stay short and wait. And I think the weakest right now is wheat. That looks, it looked pretty bad on Friday. Soybeans look okay, and corn, they both look like they're holding nicely bottom. So we'll see. The meats, they look pretty good. And I thought Friday had some great action. They were down, over $1. And then they made a beautiful rally right towards the close and got up under over $1. And then all of a sudden, wasn't even paying attention, to be honest with you. I turned around and went and checked at the end of the day. They were down. They were back on their lows. But I do believe that the cattle is on their lows. I think that they're at the bottoms. We are long feeder cattle anyways through our algorithms. But I do believe that this is it. And I think hogs have probably found some sort of a bottom as well. So I think we continue to look. And again, we will trade them based on the algorithms. But I do think these are pretty good areas to be stepping in and looking to be a buyer as well. And of course, you look at the cryptocurrency, Bitcoin, it's just been on both sides at 10 grand. Again, we expected this. We saw it When it was 3,000, we thought it would rally. When it got to 13,000, we thought it would probably have a little bit of a pullback. And I think that you're all you're seeing here is the same natural pullback you would expect out of any chart pattern. Remember, the patterns that markets leave are always the same. You take out what you're looking at the product, and you will always see the same thing. Now, a couple of interesting developments this week. We all know, we've heard about, Beyond Meat and what's going on with them. And of course, I wrote a piece for somebody about 2 months ago talking about Beyond Meat and saying that Yum Brands is probably the play to get the best benefit, because I also felt that Taco Bell may go into some fake meat. They said no, but I still think that might happen. But Kentucky Fried Chicken now is using fake chicken. Okay, so again, we're starting to see a lot of these things happen that will obviously increase. I don't know if the valuation of a Beyond Meat is still good, but I do think that the product is good and the product is there and it is real and it will continue to grow. The problem I see is, will these companies make money and the production? Okay, I think, of course, again, we talked about the euro currency, which is just falling out of bed. Now, we actually believe, and have said this for a number of years, that we believe the euro is going back underneath par or under $1, because we do believe the dollar is going to par. And as much as the Fed is trying to pound on the dollar, they cannot keep it down. And no surprise. Again, markets, some markets like the bond markets and the dollars will fix themselves and get themselves set into a proper pattern. Okay, so in the meantime, we'll see what happens. Again, no market trading and no actual trading until Tuesday, although you can trade Globex-wise and electronically until Tuesday. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. I'm going to step out of a break. We'll come back with my commentary after the break. Bubba's Bottom Line, Todd Bubba Horwitz, Sunday, September the 1st. Hey, everybody. Tuesday night, 6 Eastern time, I'm doing a webinar on hedging. It'll be the final one. And of course, September 10th is our final class of the year. So if you'd like to get your portfolio protected, I urge you to sign up for it. At least check out the free webinar. You can get the link, the registration link, from me at bubbatrading.com. I'll be happy to send it to you. Check it out on the website. It may be there for you as well. In the meantime, don't forget about our high school program. You want to help us out? We are back to school, and that's at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line, Todd Bubba Horwitz. And of course, every week I get to bitch the whole time, but I get to talk about something that really irked me during the week. And this week it was the major networks, which obviously I'm on them myself, and of course I get pissed off and argue with them all the time. Okay, we've heard about the high frequency trading, which I've battled them into oblivion. But this week was more interesting because we've all seen the yield curve inversion. Okay, now again, on this program months ago we talked about the yield curve inverting. Nobody wanted to talk about that. Now that it's actually happening, okay, they talk about it daily. They talk about it minute by minute. I watched them put up a scoreboard of the inversion. Let's face one fact, okay? The inversion of the yield curve is not a minute by minute thing to watch, okay? The yield curve, whether it's inverted today and not tomorrow, or not today and is inverted tomorrow, means nothing. It's over a long period of time, which is proven to show recessions. However, recessions appear long before the yield curve ever inverts. The problem we have is the idiots that report on it on the major networks that continue to try to stoke the fear of investors or the jubilation, but telling you that you should still, even though it's inverting, buy, because the market just want to go up. And for now, I'm not saying they're not going up. Again, let's be clear. But to try to handicap and watch the yield curve minute to minute is about as dumb as a thing you can do. Okay, because again, if you remember what we talk about correlation to markets, just because one thing is happening doesn't mean that even a market that it's correlated to will have an effect on this at this point immediately. Eventually, if the yield curve stays inverted and we continue at the current pace and we stay in this early stages of recession, we will go into a full-blown recession. But the reporting should be better. And the people that are reporting this, please do a better job, okay? Do not mislead the investor that counts on you to bring out the proper news and not some BS opinion and showing me something minute to minute that doesn't trade and has no effect on my portfolio on a minute-to-minute trade. Please do a better job and quit giving us the BS. It's about time that we saw some real actual reporting on what is actually happening in the markets and what it really means. This is Bubba's Bot Online. Todd Bubba Horowitz. As always, I thank you for being here, and we're in the best time of the year, September 1st. Football's here. College football started last night. Pro football starts Thursday. What could be better? Baseball, football, college football, all at one time. It's a gamblers and a bettors and a sports fans delight fantasy. That's everybody. Have a great week. Have a great Labor Day weekend. Enjoy your day off. And of course, we'll see you back here on Tuesday with Bubba's Daily Update. Thanks, everybody. Have a great weekend. Enjoy the Labor Day. Happy holiday. We'll see you later.